2008, a year that changed the financial world forever. A year of fear, chaos, and collapse. The 2008 financial crisis was one of the worst economic disasters in modern history, and its effects continue to ripple through our lives today. Overnight, millions of people lost their jobs, their homes, and their savings. Governments worldwide scrambled to prevent a complete economic meltdown. Trillions of dollars were poured into bailouts, but at what cost? And now, more than a decade later, the question remains: how is the 2008 financial crisis still affecting you? In this video, we're diving deep into the events of 2008, how they reshaped our world, and, most importantly, how they're impacting your daily life, even today. From rising housing costs to job insecurity, the legacy of the crash is still very much alive. So, stick around, because understanding what happened then could help you navigate your financial future now. To understand how the 2008 financial crisis unfolded, we need to start with one key ingredient: the housing market. In the early 2000s, the U.S. housing market was booming, home prices were skyrocketing, and banks were handing out loans like candy, often to people who couldn't afford them. These loans were called subprime mortgages, high-risk loans offered to borrowers with poor credit histories. Banks didn't care if these people could pay the loans back. Why? Because they weren't holding on to the risk. Banks bundled these risky loans into investments known as mortgage-backed securities and sold them to investors, pension funds, insurance companies, even foreign governments. On paper, it was a win-win for everyone, but there was one massive problem. The foundation was built on sand. When too many people started defaulting on their mortgages, the entire system began to crack. Housing prices fell, and the value of these mortgage-backed securities plummeted. In September 2008, Lehman Brothers, one of the biggest investment banks in the world, collapsed. Overnight, it sent shockwaves through the global financial system. Banks stopped lending, businesses couldn't borrow money, and economies around the world began grinding to a halt. This wasn't just an American problem, it was a global catastrophe. Entire economies were thrown into recession. Millions of people lost their jobs, their homes, and their life savings. But how did this happen? Why didn't anyone stop it? The truth is, greed and negligence played a massive role. Banks and Wall Street executives ignored the risks because they were making billions. And government regulators, they either didn't see the warning signs or chose to look the other way. Now you might be wondering, what does all of this have to do with you? Well, the crash didn't just end in 2008. Its impact has shaped the world we live in today, and in the next section, we're going to explore exactly how. When the dust began to settle after the 2008 financial crash, governments and central banks around the world stepped in to stop the bleeding. The solution? Massive bailouts. In the United States, the government approved a $700 billion bailout for banks and financial institutions through the Troubled Asset Relief Program, or TARP. The idea was simple. If the banks collapsed, the entire economy would go with them, so the government stepped in to save the financial system. But while the banks got rescued, ordinary people were left to deal with the fallout. Millions lost their homes to foreclosure. Entire neighborhoods became ghost towns, especially in places like Florida, Nevada, and California. And it wasn't just housing. Millions of jobs vanished almost overnight. Industries like construction, manufacturing, and finance were hit the hardest, leaving families across the globe struggling to make ends meet. By 2009, the U.S. unemployment rate had soared to 10%, and for many people, finding work again wasn't easy. If you were lucky enough to keep your job, wages stayed stagnant while the cost of living kept climbing. And while most of the population was struggling, something else was happening in the background. Wealth inequality was growing like never before. Thanks to the bailouts and stock market recovery, the richest 1% rebounded almost immediately. Meanwhile, the middle class and working poor were left behind, creating a wealth gap that continues to widen to this day. The crisis revealed a harsh truth. The system is designed to protect those at the top while leaving ordinary people to bear the brunt of the damage. And for many families, the so-called recovery felt more like survival mode. But how did this uneven recovery set the stage for the world we live in today? From rising housing costs to job insecurity, the ripple effects are everywhere, and we're about to break them down in the next section. Although it's been over 15 years since the 2008 financial crisis, its shadow still looms large over our everyday lives. From economic inequality to skyrocketing living costs, the decisions made during and after the crisis have shaped the world we live in today. Let's break it down. One of the most visible legacies of the crisis is the rise of economic inequality. During the recovery, while the stock market rebounded and corporate profits soared, wages for the average worker barely moved. Today, the richest 1% owns nearly 40% of the world's wealth, while middle-class families are still working to regain what they lost. Many never recovered their savings or retirement funds, leaving entire generations financially vulnerable. Let's talk about the job market. After the crisis, full-time jobs with benefits were harder to come by, leading to the rise of the gig economy. Companies like Uber and DoorDash capitalized on this shift, offering flexible work, but at a cost. While gig work has provided opportunities for many, it's also created a culture of job insecurity. Workers now face unpredictable incomes, no benefits, and few protections, a sharp contrast to the stable jobs of previous decades. Then there's housing, arguably one of the most pressing issues today. After the crisis, banks became more cautious about lending, and new housing construction slowed down drastically. This created a supply shortage that persists to this day. As a result, housing costs have skyrocketed. Whether you're trying to buy a home or rent an apartment, the odds are stacked against you. Today, millions of people spend over 30% of their income on rent, leaving little room for savings. And if you're a student or graduate, you've probably felt the impact of tighter credit markets. After 2008, getting loans became harder, and the loans you could get came with higher interest rates. Today, student debt in the U.S. alone has ballooned to over $1.8 trillion. For many young people, paying off loans has delayed life milestones like buying a house, starting a family, or even saving for retirement. Finally, let's talk about government policies. After the crisis, many countries implemented austerity measures, cutting public spending to balance budgets. This often meant reduced funding for education, healthcare, and infrastructure. Meanwhile, some of the same deregulations that allowed the 2008 crisis to happen are quietly making a comeback. Lobbying from big banks has weakened safeguards, putting the system at risk once again. So, whether it's the wealth gap, unstable jobs, unaffordable housing, or crushing student debt, the legacy of 2008 is woven into the fabric of our lives. And unless real changes are made, these problems won't go away anytime soon. Now that we understand how the 2008 financial crisis is still affecting us, the question is, what can we do about it? Let's start with actions you can take today to protect yourself financially. First, focus on building an emergency fund. Even setting aside a small amount each month can help you weather unexpected financial shocks. Second, avoid high-risk debt. If you need a loan, shop around for the best interest rates and terms. Third, invest in financial literacy. Understanding how money works, whether it's loans, investments, or retirement savings, can empower you to make smarter decisions. But individual actions can only go so far. Structural changes are essential. Governments must prioritize fair regulations to prevent reckless banking practices and address the growing wealth gap. It's also up to us to hold leaders accountable. Push for policies that support affordable housing, education, and healthcare, because these are the foundations of a fair and stable economy. The 2008 financial crisis was a wake-up call, a harsh reminder of how fragile our financial systems can be when greed and negligence go unchecked. Its ripple effects are still with us, shaping everything from the jobs we work to the homes we live in. But it's not just about what happened in 2008. It's about what we've learned, and what we do next. The past has shown us the dangers of ignoring warning signs and prioritizing profit over people. The most important takeaway? Stay informed. Understand how the economy impacts your life and demand change when the system fails. Together, we can build a future where financial security is a right, not a privilege. So, let's learn from history, not repeat it. If you found this video helpful, share it with someone who might benefit, and don't forget to subscribe for more deep dives into the issues that matter most.